Hi, I'm Chris Vavra. I'm the senior editor for WTWH Media on behalf of Control Engineering. Here live at Automate 2024 in McCormick Place in Chicago. And I'm pleased to be joined by Blake Griffin, a research analyst and manager for Interact Analysis. He's going to share some of his insights on the manufacturing industry, some of the trends and themes he's seen at Automate, as well as some overall insights on the industry as a whole. Thanks for joining me, Blake.
Thanks for having me.
So, yesterday, you had talked about some of the trends and themes during your overall presentation at the press conference within your interactive analysis colleagues. I just wanted to, if you wanted to give like just a general overview on where you see things going in the manufacturing industry now and in the future.
Yeah, so my role yesterday during the presentation was to give sort of a broad overview of where we think manufacturing is going over the next 6 to 12 months. And this being Automate, we wanted to focus more on like the U.S. side of the equation. Unfortunately, I don't think we have like a rosy picture for manufacturing over the next 6 to 12 months.
Right.
Some of the capitally restrictive interest rate environment that we're dealing with right now, we think is going to hold back growth. Currently, our forecast is minus 3% for U.S. manufacturing. And when I say U.S. manufacturing, we're talking about manufacturing production. Minus 3% is where it stands now. I'm hopeful that we're being a little bit conservative with our forecast, and that the reality will be a little bit better. I think the general consensus from people that I've spoken with on the floor and throughout interviews is that demand is slow, but the bottom hasn't necessarily fallen out. So,
Right.
So yeah, flat to slightly down growth for the year.
Yeah. And, some of that was to be expected, perhaps, because manufacturing shot up like a rocket in the wake of the COVID-19 pandemic. So you saw like a sharp uptick, and then it's been kind of sliding back down.
Yeah, that's what a lot of the vendors that I was speaking with yesterday were saying. It's almost like they enjoyed all of the riches from that sharp uptick in demand in 2021 and 22, and that a lot of stocking up had occurred, so they're not necessarily seeing those same order volumes, but it doesn't necessarily mean business is bad. It just means that it's kind of returning to a more normal kind of a fluctuating environment.
Yeah, I liken it to a sugar high to a couple of people. Like, now it comes the crash, so to speak, but there are also supply chain issues, so there's a lot of bottlenecks, and it seems like those finally receded a bit, and things are normal-ish.
Yeah, I think, as it relates to the supply chain, I haven't really heard as much around really intense bottlenecks occurring that are holding back manufacturing. There were a couple of vendors on the floor that were saying there were some components that they were still struggling to source, but it's not anywhere what we were seeing 2 years ago. There were lead times up to a year on some products. So
like that was the big theme I know at Automate 2022 is like nobody could get their products out, and it was causing a lot of consternation and concerns. Like, man, how are we going to do this? And people were hungry for solutions then. And they still are. They're like, people want those solutions. They want to improve their automation, and one of the industries that was talked about yesterday, AMRs, it's not all bad. Like, they're growing by leaps and bounds.
Yeah, it's one of those hot spots within automation right now. Ash Sharma, our managing director, gave the presentation showing the kind of hockey stick growth curve that we all love whenever it comes to new markets. So there's definitely areas that are still seeing significant growth and seem to be immune to the broader manufacturing economy right now, just because they're in such like an early growth phase in their life cycle.
Yeah, like he was saying that they were in the pilot stages. Now they're in the full speed ahead stage. So, and a lot of industries like warehousing and automotive and food and beverage, they're really taking advantage of this and really realizing what they can do for their facility and for their operations.
I think I forget what his number is exactly by 2027, but it's in the upper tens of billions.
I think
in terms of a market size.
I think it was 15 billion because it was five. Right. It's 5 billion right now. It's supposed to triple by 27. So
it's monumental growth. But I'm confident in that number because Ash has such good relationships with mobile robot suppliers.
Yeah, another industry that seems to be doing pretty well for themselves, ultra low voltage motors. They're showing strong compound annual growth rates. What do you attribute to that kind of growth?
Yeah, it's a lot of the same. The So the ultra low voltage motor area is interesting. So it's looking at motors that are less than 60 volts. If you go onto the Automate floor, you'll see a lot of companies displaying these motors in a number of different applications. They tend to be used in conveying applications. So they're the motors that drive the integrated rollers that are used in some conveying applications. But the big one that's driving the growth is the HV AMR trend. So that hockey stick curve is benefiting the ultra low voltage motors market because they're battery driven. So they're typically 48 volt or 24 volt batteries. So they need lower voltage motors on board. So basically any HV or AMR that's sold, you get the benefit of selling 2 or 3 motors alongside that to help with the drive process. So.
Batteries are really playing a major role in that in other industries and really kind of driving that growth. And, like the technology for batteries as well as with like ultra low voltage motors has improved so much in the last several years. Do you see any potential breakthroughs that could make this growth even better?
I'm probably not the best position to speak on the breakthroughs in battery technology. I will say we have analysts that cover battery technology at Interact. I think like as it relates to ultra low voltage motors, there is just an uptick in, like you say, in battery applications that are directly serving this market. So I don't know if I can speak on like the technology breakthroughs with battery, but it definitely is an area that's driving growth.
Yeah. Another big trend that's been happening in the last several months is companies like Siemens and going out and buying these specialists in motors or AMRs, not specifically Siemens, but there's been a lot of acquisitions to go find those niche specialists or those specialists who can enhance or broaden their portfolio. Do you expect that trend to continue?
Yeah, generally whenever we see this level of growth in a market, it tends to attract acquisition. Siemens just acquired a division from EBM Paps. It was their ultra low voltage motor division, and they directly cited in the press release that they wanted to provide like a more holistic solution for HVs, AMRs, the intralogistics play. So I think you'll see. I mean, Siemens is a great company to look at if you're looking at a signpost in a direction a market's going.
Right.
They're an incredibly intelligent company that makes really smart strategic moves. So so I think that's probably a good indication that there's more to come in the future.
And other companies, Siemens included, that have been trying to become that all-in-one solution, like the one-stop shop for all your manufacturing needs, regardless of what it is. You see it with like companies like SEW Eurodrive, which has gone into the AMR market of all things in the last couple of years after being like a motor and drive specialist. And other companies are kind of doing that along those same lines. Do you expect that trend to continue?
Yeah, I mean, SEW has always been kind of the intralogistics specialist in the room. I mean, they dominate when it comes to conveying applications, so it makes logical sense that they're starting to move more towards mobile solutions as well, because they don't want to have their business cannibalized by this emerging trend. So to bring it in house, and I think they've been doing it for quite some time. So I think they've developed a quite sophisticated portfolio around it.
So I know we're only into day 2 of Automate. What's like the one big takeaway you've gotten from the companies and customers and vendors that you've visited so far? What's the big takeaway so far?
Yeah, so I can give it a couple. So I would say for the ultra low voltage trend, so one of the things that I'm noticing at this Automate, and it's the same thing that I've noticed at other trade shows. If you were to be here a year ago or 2 years ago, you didn't see this. So there's a product that a lot of vendors are showing, which is an integrated wheel. So it's a drive, a motor, and a gear unit in a wheel, and it's used. Those wheels are typically used in like AMR applications.
Okay.
It's a product that I saw, a couple prototypes, I guess, a couple years ago, and now if you go walk the floor, almost anybody that's producing those types of motors have that product on display. So to me, that's like a really good indication that product is going to take off. If so many people have validated it and are producing the product now, it's a signpost to me that it's going to start being used more heavily. Which is one of the factors that drives that really sharp growth that we were mentioning. I would say the other thing, like just more generally, People seem to be optimistic about the back half of the year. I mean, despite our forecast being flat to slightly negative,
Right.
people are saying that they're still receiving orders, albeit not orders that are leading to growth. But I think, yeah, I think there is optimism amongst most of the people that I spoke with.
Yeah.
Yeah, which was surprising to me, because I mean, I'm always wrapped up in these models, and
Yeah.
whenever I see it spitting out negative growth, I kind of expect that to be the sentiment, but it really was.
Yeah.
It is business ticking on as usual, albeit not necessarily at high growth rates.
Yeah. They kind of seeing like, well, it's not that great now, but it'll be better down the road.
Yeah, I think it's someone quoted yesterday as saying, like, if you were to look 2 or 3 months ago, people were talking about delaying projects for half a year to a year.
Yeah.
That conversation has now moved to, like, we're delaying it for maybe a quarter,
Mhm.
amongst this kind of uncertainty. So,
Yeah.
and yeah, it's the idea that manufacturing, the bottom is not falling out. It's,
Right.
It is. It's just kind of a slowing down as from the sugar high, as you mentioned.
Yeah. So, all right. Well, thanks very much,
Yeah.
Blake. I appreciate your insights. And if you enjoyed this video, we have other interviews with Blake Griffin talking about other industry trends on Control M's TV. There will also be a link in this video to his insights from yesterday's presentation, along with Ash Sharma and Tim Dawson, who provided insights on AMRs and machine vision. So hopefully you'll check out that article. And I'm Chris Vavra, Senior Editor, WTWH Media, on behalf of Control Engineering. Thanks for watching this video.